the CPI, a read that could either confirm this early year rally or very well kill it. So what's really at stake? Let's ask Malcolm Ethridge, CIC Wealth Executive Vice President, here with me at our headquarters today. Welcome up. It's good to see you up from D.C. and here at our headquarters.
Yeah, I'm glad. I know you didn't think I actually owned a tie, but here I am.
All right. It's good to have you. So markets feel like a little nervous. We've got CPI now looming, right? Tuesday morning. We got one more day ahead of that. What's really at stake here now?
Yeah, I actually think sort of the opposite. I think investors are showing a little bit of over bullishness now. If you just consider what stocks have actually started to break out, we're seeing crypto make its way back. I think folks are getting a little bit over their skis with this market reaction to it, at least so far.
Well, the question is, the areas where maybe they've gotten a little over their skis, that's where you've got more nerves, I think, than other parts of the market, right? The growth trade.
That's right.
Which has obviously started the year really well, but lately looks like it's a little shaky.
I think you're even being generous calling it a growth trade. I would call it just speculation, wild speculation, and especially since you consider this week, anything big happened this week. Anybody who's not currently rebranding their company to include something related to AI right now is worried that they're going to miss the growth train. And so we're getting a lot of speculation as the reason crypto is on its way back. We're getting a bunch of companies that have no business fundamentals whatsoever that are going to have this resurgence because they throw AI in there. They talk AI in their earnings, and it throws things out of whack a little bit.
I feel like, you've been pretty negative for the last many, many months, but I feel like you started to turn the corner a little bit and try and get a little more positive as the year ended, as we started now. Are you back to thinking that we're going to go back to the October lows, or where are you now?
No, I think we definitely have potential to come out of the fog that we've been in, all of 2022, basically. But I just want to caution investors to focus on companies that actually have businesses, right? The quality companies that are actually returning cash to shareholders, for example, right? Paying a dividend or doing buybacks, or maybe a mix of both, and not so much jumping right back to the more speculative names that aren't really doing any business. They're just stock tickers.
What's on your short list of best ideas right now?
So it's not going to be a surprise to anybody at this point because it's been the talk of the town all week. But Microsoft, I think, is actually on pace to become the most important company the rest of this decade. If we think about Apple's iPhone moment in 2007, I really think that that's possible for Microsoft with this whole OpenAI and ChatGPT generative AI component.
So you're able to separate what you would consider to be more speculative parts of tech and then some of the mega cap techs, because there's been a big question about those too, hasn't there?
Oh, for sure. I just said Microsoft, but they're the only mega cap tech that's positive this week, right? So earnings last week really took a lot of the mega cap tech names down, and folks started to turn away from them. And they said, I can go buy a Tesla or go buy a Facebook or something else and see significantly double-digit returns so far this year. Why would I own an Apple, or why would I own Amazon or whoever? Microsoft's the only positive one out of the gang. But I think still we can look at those names and say they really do business. They really are in the business of doing X, Y, or Z. I can't really justify why I might want to own the metaverse company at this point, even though Mark Zuckerberg used the word efficiency 50,000 times in his last public
But you
appearance.
still have to decide what the right price for that is. If these are, in your mind, more legitimate, businesses, more legitimate growth engines and cash generators, there's still a price to be paid that's right versus what was allegedly wrong last year. Sure. And that's why they corrected so much and why their valuations corrected too. The jury is still out, isn't it, in terms of whether those valuations have come in enough?
I don't know. You hear about this multiple compression that we're supposed to see before we actually turn the corner and the market starts to recover from the bear market of 2022. But I would argue that the thing that makes this situation so unique and tough to make that argument as strongly as you might in the past is the jobs market is so strong that we don't have to have this recession that everybody thinks that we have to have. We don't have to have this multiple compression that goes all the way back down to 15 that people think that we necessarily have to have this resurgence. We're probably already turning the corner here.
You really think that? So you think we, in terms of what, like a new economic cycle, a new bull market cycle, as some people have suggested too?
Precisely. So just statistically speaking, since 1950, right? So in recent history in the markets, the average bear market cycle lasts about 14 months. And if you think about the one outlier that was 2020 when the bear market only lasted 2 months. We're already 14 months from the November 2021 start of the bear market. That means that history is on our side. And if you also couple in there with the fact that since 1950, the same period I'm giving you, the stock market always moves 4 or 5 months on average before the economy starts to show you that things are getting better. We're already feeling some semblance of things are on the mend. You know?